Nothing short of a legend in the macro hedge fund world, returning capital to outside investors. As you mentioned, Louis Bacon, who started More Capital 3 decades ago and grew it to manage more than $10 billion, has decided to manage money for himself and the firm principals. That's according to a letter obtained by CNBC that was sent around to investors this morning. Bacon says disappointing results from his flagship funds informed the decision, noting that all three returned low single digits year to date. However, over 30 years, More returned a net annualized return of nearly 18%. The letter makes it clear, though, that Bacon is not converting his firm to a family office, but he will be taking a step back from day-to-day trading, letting other portfolio managers launch their own funds within the firm. So still, Moore's move follows a slew of other managers who have been shuttering their decades-old firms, returning capital to investors and or converting to family offices. These are names like Leon Cooperman, Eric Mindich, Jonathan Jacobson of Highfields in recent years. Others like David Tepper and John Paulson are thinking about similar moves, Scott.
Leslie, I'm also quoting from the letter, and I just wanted your input on this. It speaks to the conditions that have existed and been so difficult for some in the business, depending on what kind of funds you're actually managing. He says challenging trading conditions and muted returns for our macro multi-manager funds of late masks a vibrant success at More in our long-short equity platform, our private equity and venture group, our real estate, and our specialty lending businesses. You can obviously see where the strength has been and where the weakness has been for some of these managers over the last few years.
Oh, absolutely. There's been a huge bifurcation between private equity, private debt, real assets, and then managers who are operating kind of these more traditional hedge fund models. There was just new numbers out this morning from eVestment saying that macro has been one of the most challenged strategies this year, with $23 billion worth of outflows year to date, which is remarkable. Long short equity has also struggled as well. It sounds like More has had a bit more success in that area. But, you know, we spoke earlier this year about how Jeff Vinnick was launching his long short hedge fund after years out of the business, after 6 years out of the business, getting back into it because he felt like the conditions were right for that, and then all of a sudden just deciding to throw in the towel on that move as well. So it's definitely a challenging environment out there for some of these kind of more traditional hedge fund managers.
Yeah.